From the morning reading, XLY new all-time high as oil falls and the SPX pauses. Oil stocks lead SPX decliners. The VIX moves higher. One of 9 sectors moved higher on Monday. XLY, XLP, and XLV were the strongest sectors, while XLE was the weakest sector. Oil futures fell $1.50. Oil futures fell $1.21 to close at 43.05. Breadth weakened compared to the prior day as decliners led 1871 to 1098 on the New York Stock Exchange and led 1510 to 1101 on the NASDAQ. Falling oil prices weighed on energy as the weakest sector on Tuesday, as 23 of the top 34 SPX decliners were in the energy sector. On the S&P 500 snapshot, a weak start to the week. Global equity indices outside the U.S. were mixed, and the big 3 U.S. indices were uniformly negative. The NASDAQ finished fractionally lower at a negative 0.5%, while the Dow and the S&P settled a bit lower at 0.31% and 0.30% respectively. The benchmark 500 opened lower and sold off to its 0.60% intraday low during the lunch hour. It then struggled higher in a couple of ways to half its loss at 0.30%. The popular financial press pointed fingers at oil for the weak session. West Texas Intermediate crude fell 2.4% to its lowest close in exactly 3 months. The yield on the 10-year closed at 1.58%, up 1 basis point from the previous session. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:35 a.m. Mountain Time, and I'm recording this in preparation for the market day of July the 26th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into our morning report. Overnight action was pretty non-directional. All 4 of the U.S. broad-based indices are essentially rotating around scratch, with the S&P and the NASDAQ just above, and the Russell and the Dow just below scratch. In terms of crude oil, you're down about 1.37%, so building on yesterday's break of support. And then euro up just above scratch, bonds up about 0.25%, and gold up just fractionally. China up about 1.14%, Hong Kong up about 0.2%, Japan down about 1.5%, Germany is up about 0.25%, and the United Kingdom just below 0.25% up. In terms of macroeconomic reports for today in the United States, of note, you have new home sales and consumer confidence, and that's about it. Looking forward to tomorrow, we have core durable goods, pending home sales, the weekly crude oil inventory, and we have FOMC statement with the federal funds rate. So market could be pointing towards that if you see it start to go sideways, especially tomorrow, probably in anticipation of that number. In terms of the S&P futures, and you see I still have this area of resistance painted on here, and there's a reason for that. I want to see if we eventually come back and tag that as a test of support. But you can see yesterday's action, indeed recent action, is all tightly wound in a sideways pattern. Actually been alternating, you notice here, down, up, down, up, down, up, down. So we'll see if today ends up being an up day when it's all said and done. You know, while yesterday did set a new intraday high, it closed down on the day and was back inside the range. And indeed, that was just a kind of a tickle. And, you know, none of this action in the last trading week has really achieved anything in terms of either significant movement to the up or downside. So nothing yet to push us out of that, and it indeed may not happen until after the FOMC statement on tomorrow. In terms of the Dow, you can see pretty much the same pattern, a little weaker. It's more of a kind of a flag pattern than the sideways pattern that you have on the S&P. And then the NASDAQ also very much in a sideways pattern. And the Russell has been in a sideways pattern really for 2 weeks now. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, so at least 2 weeks of a sideways pattern in the Russell. So after this very robust bullish move and the post-Brexit move, all four of these indices have kind of run up, set breakouts in one way or another, with the S&P and the Dow new all-time breakouts above the prior area of resistance. With the Russell and the NASDAQ, they did break through significant diagonal resistance and intermediate term horizontal resistance, but still both have a ways to go to get to their all-time highs, and yet they also went into sideways patterns. So that's the world that we're in right now, back to sideways and waiting for a move one way or another. Is it a consolidation by time and then break up, or will we eventually see this roll down into something of a retracement and then a very, very important test of the prior resistance areas? In terms of crude oil, has been absolutely disappointing, I'm sure, for many who thought this may be a wedge pattern, and I thought it was probably going to go that direction, but it's broken down. If it was a wedge pattern, it should have broken up, and it is clearly broken down below. It's broken below the cloud, broken below the diagonal support line. So important action on crude oil breaking down, and wow, it's in terms of where it might go, it's broken through that kind of swing horizontal support. I suppose we could theoretically drop down to about $39 potentially before anything terribly obvious kind of comes into view, other than maybe a fib extension or some sort of measured move, that kind of stuff, kind of hidden support and resistance. So crude oil making a relatively important move, and as you heard from one of the morning authors, was responsible for much of the weakness yesterday, it would seem. In terms of gold continues to consolidate and also a sideways pattern, and then bonds also in a sideways pattern, not really having broken one way or the other. So as to whether they're going to show us any kind of sign for the risk on or risk off kind of direction that the markets might go, not tipping hands in any obvious way. Volatility also, after the post-Brexit vol crush, has also gone into sideways patterns. So all these markets, as they are interrelated with each other, not really showing much in terms of an inclination to go one way or the other. Let's see. I think that's probably enough on that. Well, let's quickly look at some of our stubs. So here's utilities. Utilities had a good Friday, though yesterday was a doji. And your staples also, nothing really showing there. Also doji yesterday. We looked at bonds. Here's healthcare. Healthcare has been, especially the S&P version, this one's probably going to take a bit of a hit today. Gilead had disappointing earnings, and there was also some other companies in that biotech space that had disappointing news after the markets closed yesterday. So look for this sector today to take something of a hit, perhaps even a gap down hit. So watch that in today's market, but not much of interest really. So let's go ahead and go to the daily report and wrap this thing up. If there's not much to give us new indications of change, we won't spend too much time on those charts. In terms of the daily report, our top area, of course, is where we look for kind of market timing signals. And overall, our market trend intermediate term phase opinion is still market phase 2, which is bullish. Trend reversal, the break of diagonal, and now horizontal resistance are 3 market timing signals. First one coming from IBD is bullish, confirmed uptrend. The second one, GMI index, is bullish, perfect 6 out of 6 with the buy signal since 7-1. And the third one is from Stock Charts Decision Point Scoreboard, and is very strongly bullish, but has that little wrinkle that we've been talking about forever, it seems like, with the long term not giving us a clean signal. So obviously the consensus of all these signals is strongly bullish, but not without an asterisk. In terms of the position sizing opinions, both those models are 100% intermediate term. Market posture, very, very, very strong across all 4 indices. In fact, even with a little bit of weakness yesterday, they're still all 4 up over 95, and anything over an 80 is going to still be considered severely strong bull signal. All this is supported by a bullish sentiment line, so expectations of pullbacks are that they'll be short and shallow, and that the bullish legs will be much longer and go further. In terms of the strength of the trend, it is a strong trend. Overall hedge warning status, level 0+, normal with some cautionary aspects, mostly related to that decision points, long-term signals being mixed. In terms of our special opinions, no change from yesterday. VIX is in the acceptable window to initiate new positions. Cover calls and put selling also acceptable for novice traders to initiate new positions. Just be mindful that you have FOMC out there tomorrow. There, frankly, is going to be the big money is going to be sitting on hands between now and then, and waiting to see if that gives us any impetus for this market to continue higher and break out, or if it is the needle that breaks this down and makes us go down there and test support. If that happens, that could be an outstanding opportunity to do some put selling. So be getting your watch list ready, both for cover calls and for put selling, and probably wait until you get that news to start initiating new positions. In terms of specific warning areas in the volatility arena, only those 2 low-grade warnings we've been talking about in recent days. No change there. Trend base, all bullish all the time. Intermarket risk aversion indicators, all risk on solidly with no sign of rolling over as late. Sentiment, no changes here. We did have on the fear and greed, it didn't even change there. So 85 versus 85 on the previous close. So everything basically status quo at this point. In terms of sector specific, you have on our market postures, energy, of course, degraded yesterday, and it's now neutral in the long term, and to the intermediate and short term in a down posture. Industrials also slid down to neutral in the intermediate and short term recently. In terms of percent change, everything was negative yesterday except consumer discretionary, which is an odd one, frankly, to be positive when everybody else is so negative. You see the real outlier, though, energy down about 2%, and then for the week down over 3%. So energy definitely is going in a strongly negative direction, while everything else yesterday, while weak, was, marginally so. Most of these sectors just below scratch, really. So not a lot of change there. So I think that's probably it for today. Let's go ahead and move through. Well, one thing I will say, if you are watching this on YouTube, as of course you are, be aware of these little gear buttons. And there's a couple things. One, If you are subscribed, and I highly encourage you to do that because that lets you know when the content's actually published and to be able to jump on that right away. But the other aspect to that is that once you get that notice, give it a couple minutes just to make sure that it's fully available in high def. And then when you're playing back, make sure that little HD is on that gear button. That'll give you the sharpest resolution. The other aspect to this under these gear selectors is an option to be able to play this back at 1.5x. And generally most people can listen to this at about 1.5x and cut down on the time that it takes to get through their morning preparation and listening to this video while still hearing and understanding all the information that's conveyed. So you can frankly listen faster than I can talk. So just kind of be aware of both of those aspects and the advantage of being a subscriber to the YouTube channel. When I say subscriber, it's a free subscription, so no worries there. Obviously, if you really like what you're hearing, there's other products that are available from Falcon Global, including membership to the trade room, where you get a whole host of other trading tools and resources and modeling a core portfolio and a whole host of different strategies that are available for a small $50 a month subscription fee. But this YouTube market preview market preview subscription from YouTube, that is free. So no worries there if you're just wanting to tap into that. So two different products available there. So obviously we always have to have our disclaimers. Hit the pause button if you need more time to review the disclaimers. I am not your financial advisor, have no fiduciary duty or understanding of what your situation is. Full disclosures can be found at this hyperlink down here at the bottom. We'll see you back here for the next session from Falcon Global Market Preview for tomorrow's session. In the meantime, manage that risk as always, and everything else should fall into place very nicely. Good trading. Go learn something.